Hello everybody, welcome once again. We are meeting here on my channel krishnasinghdeo, and thank you so much for viewing our videos and subscribing to us. Slowly and gradually we are becoming a bigger family. Thank you so much for that. Today's video is for class 11th student. We are doing the chapter of journal entries. In fact, we have just started the chapter of journal entry. In the previous week, we had done first lecture of journal entries where we had understood what is the method of classifying accounts into various ways. As per the modern approach, there are 5 types of accounts which we had gone through and understood the rules of debit and credit. Today, we are going to understand what are the rules of debit and credit as per the traditional approach. So let's get started. As per the modern approach, we had seen there are 5 type of accounts. Account number 1 was our asset account, and account number 2 was our expense account. This were in the first group where the rule was debit the increase and credit the decrease. Means if any expense is increasing, we'll debit it. If any asset is being bought, then it will be debited. And on the other hand, if asset is being sold, it will be credited, and expense reducing will be credited. On the second group, we had some more account, 3 type of account, which were liability account, revenue account. Second number was revenue account, and obviously capital account also come under this category. So here the rule was debit will be the decrease and credit will be the increase. So this way we had understood. This is more scientific way of classifying the accounts, but there is one traditional way also. So the traditional way is not used so much, so only for the introduction purpose I am teaching you today, because in your multiple choice questions and in any other form this may be asked, but while passing the journal entries I will not be using this method at all. I will stick to this modern classification where there are 5 type of accounts. So what is this classification as per the traditional method? So traditional method says that there are only 3 type of account. Under these, this is number 1 account, which is known as real account. Number 2 type of account is there, which is known as personal account. There will be further classification of personal account. And the third type of account is going to be there, which is known as nominal account. Okay, these 3 accounts are there. Now let us understand what is real account. Under real account, we have all the assets account like plant account, machinery account, building account, or we can say cash account, stock account. All these are the accounts. Okay, cash account, these all are the accounts which are known as real account, which have physical existence or which are real assets, etc. Okay, these are known as real account. Whereas when we talk about personal account has 3 type of classification. Under personal account, number 1, we are going to get real person or natural person. Who is real person or natural person? Real person or natural person are people like you and me. Yes, means who are the natural person, who are live human being. Okay, they are known as natural person. So Ram's account, Sham's account, these are the accounts which are known as natural person. There are other type of people who are artificial person. So who is artificial person? Means who are not person in reality, who are not human being like us, but they are being given the status of an artificial person by law. For example, a company or a business or something like that. So like ABC Limited's account. ABC Limited account is a artificial person account. Some bank's name, okay, like PNB Bank. PNB Bank account, it is also a company. It is an artificial person. Any business's name, okay, like Messrs. S. Chan. So this is going to be a artificial person. Then third type of personal account is known as representative. Representative personal account means what? Representative personal account means which is actually not a real person or a natural person. It's neither an artificial person which is created by law. So then what it is? It is actually representing a person, means the face is something else, but behind it there is a person. For example, if I talk about outstanding liability, outstanding expense, let's say outstanding salary. For example, there is outstanding salary. So outstanding salary on its own is nothing, it's just the name. Behind it, who is that? Behind it, there's a person for whom the salary is outstanding, to whom we have not yet paid. So any kind of outstanding salary is a personal account. Capital account, what is capital? In reality, capital is the representative of the owner. The proprietor's account is known as representative personal account. So these type of accounts which are named something else, but where what is happening, there is a person behind it, so these accounts are known as representative personal account. Then we have nominal account. There is place over here under nominal account. What we were doing over there in the modern approach, that we had written separately what is expense account and revenue account. Here both those things are included. So nominal account means this, which is just for namesake. Any kind of expense like salary, commission, etc. is over here, or any kind of income like rent received, discount received, etc. will come. So both expenses and incomes will be included. So there we had classified into two different categories, and here we are classified into one category only. So these are three major kind of accounts. Now let us understand what are the rules of debit and credit. For each one, debit and credit rules are going to be different. So first of all, I'm going to talk about the real account rule of debit and credit. So rule of debit and credit is, for real account, is debit what comes in, and credit what goes out. Means if anything is coming in the business, for example, we purchase machinery, so machinery is coming in, machinery account being a real account will be debited. If machinery is being sold, credit what goes out, you will credit it. So this way you are going to find out the rule of debit and credit as per the traditional approach for real account. Now the next account which we have is this personal account. The rule of personal account is debit the receiver and credit the giver. Means what? If suppose to Ram we had to pay something, so we have paid to Ram, so Ram's account is going to be debited because debit the receiver. Suppose Ram had to pay us something, so Ram is paying to us, so we will write Ram's account on the credit side, because in this case Ram is the giver. So debit the receiver, credit the giver in all three type of personal account. That internal classification of personal account as real personal or natural person, artificial person, and representative person will remain same, but the rule for everybody, the rule is going to be same for everybody. Last type of account is our nominal account, where all the expenses and losses are being recorded. So the rule for this account is going to be debit all the expenses and losses will be debited, and credit all the incomes and gains. So for example, we have discount allowed to a customer, so we will write that discount on the debit side because it is an expense or kind of a loss. And if we have received the discount, so this is a kind of income or gain for us, so we are going to write it on the credit side. So both income and expenses will be tackled at one place only, known as nominal account. So this is it, students. We have done all three type of traditional account. I will just show, if you want you can click a picture. I have put everything on the screen, and I will recommend you to write it also, so that you memorize, it goes into your memory, you will be able to register it more properly. So these are the classification as per the traditional approach, where only three type of accounts are there: real, personal and nominal. And say along with me, what is the rule? The rule for real account is debit what comes in, credit what goes out. The rule for personal account is debit the receiver, credit the giver. Yes, you are right. Say along with me. Don't be shy. Say along with me loudly so that it registers in your brain. And the third type of account is a nominal account, where the rule is debit all the expenses and losses and credit all the incomes and gains. So these are the rules which we have to follow. So we are done with the rules of debit and credit, and in the next class we are ready to go with actually solving the journal entries for which you were itching till now, you were waiting till now. Yes, we are ready for it. So in the next class we'll be starting that. But before that, let me tell you, many of you are coming and watching our videos. I see sometimes up till 90% of my viewers are the ones who are not the subscriber. Why you are so miser in subscribing the channel? Please do subscribe to the channel. We will keep meeting like this, and I promise you that I'll bring all the quality content over here for all of you who are in class 11 and 12. So with this note, I'm signing off. Bye. Have a great day.